Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, June 8th, 2024. And our top story today, markets overcome a New York Stock Exchange technical glitch. And joining me now to discuss this and a lot more, Jane King is joining us from the NASDAQ. Jane, always great to see you. Thanks so much for joining us on the program this morning.
Great to be here, Jeffrey.
I don't know if it's humid where you are, but here in North Carolina, it has been so humid. We've had lots of rain and all sorts storms and things.
Yeah, no, well, it's definitely humid here. It feels like this week was kind of a turning point where I was running some errands last night, and I was like, okay, yeah, it's summer.
Yeah, well, I do remember being in New York and having the soles of my shoes melt on
Yeah,
the on the
it gets hot and gross here, and
it
boy, does
does.
it smell.
Yeah, well, yeah, that's try. Anyway, all right, let's talk about we're gonna talk. I mean, we could do a Jane King New York show. We'll do that at some point. But Jane, let's talk about this market glitch. I thought this was very interesting. Apparently, the New York Stock Exchange actually had to shut down trading for some stocks
Yeah,
because of this technical glitch. And you're not at the New York Stock Exchange, you're at the NASDAQ, so
yeah.
disclosure, but any ideas about that and your thoughts and
Well,
analysis on
they said, it was not a cyber attack. So I mean, who knows what really happened there? But Berkshire Hathaway, of course, got a lot of attention. That's a $600,000 stock, and it went all the way down to what, like 300 or something. Pretty much lost all of its value for a brief amount of time. Like, I don't know, not if anybody happened to buy it at that time, those are not being granted. So you're not
yeah.
going to be able to swoop in and get Berkshire Hathaway and be lucky. But yeah, I mean, I think just as these exchanges, I mean, the NASDAQ is all electronic, and as we just become more and more electronic, that this is something that we're going to have to deal with.
And I just thought of something I want to ask you. It's right out of left field, but I want to ask you about Texas. I think is going to start their own stock exchange. I want to get your reaction to that. There's London. I mean, there's major exchanges in New York. New York has always been
Yeah.
the hub that as long as I can remember. London, Texas, going to have its
Yeah.
own exchange.
Well, and they're backed by Blackstone and Citadel. So some big money is behind them. There's this kind of sense that there is a between the NASDAQ, the New York Stock Exchange, that they just, are such a monopoly, that they charge a lot of fees. And I know there was in the Wall Street Journal, there was some issues about the NASDAQ requiring all the listed companies have a certain amount of, people, females and LGBTQ and things like that on board. So Texas was looking at, well, let's come up with an alternative to this. And apparently they're moving forward. It would be in Dallas, and we'll see how it goes. I mean, the trend over the past 20 years has been stock exchanges merging. Chicago used to have a stock exchange. Philadelphia used to have a stock exchange. They had trading on a floor, everything.
Yeah.
But all those have closed and merged. But here's a brand new startup. So we'll see what they do.
Yeah, real interesting. It's just the reactions and all the things that we don't cover on the network, but it's going to be interesting to see. And I guess you can make the argument that there is some type of monopolistic power, I guess, that these exchanges have. All right, Jane, let's talk about something a little more mellow, shall we say? Let's talk about I don't know, mellow. Let's talk jobs. Jobs report came out Friday morning at 8:30 a.m. from our friends at the Bureau of Labor and Statistics. What do you got for us?
So the number was bigger than expected in terms of job growth, 272,000 jobs created. So the average is about 190,000. There were a few people above two, but it was a shocker of a number. It was higher than even the highest estimates. The unemployment rate did go up to 4.0%. So we've got a four in front of that employment number, which psychologically may do something. We did see the government add 43,000 jobs. Factories added 8,000 jobs. The private sector added 229,000. So it was a stronger report than expected. Now, some of the previous reports, once you dug into them a little bit, you saw a lot of part-time jobs and a lot of immigrants getting jobs, things like that. So people are going to pour over this and kind of determine what it means. But in the near term, at least, it probably means we won't get an interest rate cut this year. At least that's what the market is interpreting.
All right, Jane, let's talk. We talked glitch. We talked maybe a stock exchange in Texas. We talked hot weather. Give us the what happened in the market this week, because I have to think that there was some reaction to the glitch, there was reactions to other events happening. What can you
Yeah.
tell us about the
Well,
market
it
this
was
week?
interesting market because we knew we had this jobs number on Friday. And the market was kind of in a holding pattern all week until we got that number. And so it was really all about jobs this week. ADP fell a little short. It's interesting that we see this number stronger, but ADP weaker. And there's a lot of debate now what we're getting into, like which number do we trust? Do we trust the weak GDP number? Do we trust the stronger jobs number? A lot of mixed signals in the market right now, and I think that that's going to just lead to a lot of confusion here until we get some clarity on where the economy is headed.
But yet I think the S&P 500 hit a high,
NASDAQ hit a
all-time high
record high, S&P
for
500 hit a record high this week. A lot of that
unbelievable.
driven by NVIDIA. So NVIDIA has outsized influence on the market right now.
Yeah, I was going to say, and I saw I don't know, I think it was the CEO of NVIDIA, and they have them dressed up now in like a leather jacket
Oh
and
yeah.
a shirt. Yeah, I mean, do you think I should do that? Maybe change my attire and
Why
be kind
not?
of hip. I mean, be kind
Yeah,
of, they got them, I guess when you run arguably probably one of the most profitable companies and it's doing so well and AI is a darling,
yeah.
you gotta dress the part, Jane.
I mean, somebody said this week this is the most important company in the world right now. I mean, and you think a few years ago, it was, I mean, NVIDIA has always been a great company, but it made like graphic chips for video games and cameras and things like that. And then, but they happened to get into AI and then bam. So all of a sudden it's gone from, kind of just a good solid company to really having, impact geopolitically, certainly economically. So, and the CEO is from Taiwan, and that's kind of a hot spot. So, I mean, it's a interesting situation to be in.
And what does that mean for the Magnificent Seven? We've been talking about tech stocks for a long time with you, and actually the overweighting, I think, in the S&P 500
Oh
to
yeah.
tech. So is it now like a subset that we should be focused on instead of like it should be AI and then everybody else?
Right. Well, we've got, Google's significant AI, Microsoft, big investment, NVIDIA. So those are the big three. Apple has been slipping a little bit because they've been kind of perceived as being slow, jumping on AI. And they have the Worldwide Developers Conference coming up in June. So maybe they'll unveil some, plans for AI there. But yeah, it's really those three. And Tesla has slipped a little bit as well, even though Elon Musk is certainly involved in AI. He was helped created OpenAI. So it's like it's all kind of interconnected here.
Yeah, he gets dinged up, I guess, at this pay package he's supposed to get
Yeah,
in Tesla. So he's getting all dinged up by some of the
that's right.
bigger pension funds and activist shareholders, a whole nother issue. Jane, we're
Yeah.
going to have to leave it there. Always great to
Okay.
catch up with you. Stay cool in the New York
You
heat, and
too.
we'll talk to you again next week.
Okay.
Thanks, Jane. Always great to see you. Thanks for sharing your perspective. And when we come back, we'll take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device. Welcome back. Well, it was a great week of great shows with great topics and, of course, great guests. We kicked off the week with a look at how video games are a lifelong source of entertainment for many Americans. Let's take a look.
That's right. It's actually nearly 2/3. So 61% of Americans are playing video games regularly. And the way our data looks at that is someone who's playing a video game at least an hour a week. And with 190 million of us playing video games, what we see in this data is that everyone plays. I think one of the persistent stereotypes about games is that like this is a young man's game, right? This is teenage boys in their parents' basement playing video games. And there are teenage boys who are playing video games, and some of them, I'm sure, are in parents' basements. But the reality is, everyone plays. And we see this cut across all generations, all race, ethnicities. Nearly half of people who are playing games every week are women. And so it isn't who society has been, the stereotypes have led us to believe is playing games. The truth is, everyone plays. you are a cat person. I have a 10-year-old daughter at home, and she has a dad. My husband is very allergic to animals, so we have a pet-free home. There's a fantastic game that came out, I think 2 years ago now, called Stray. It's a single player game, but you are a cat in a post-apocalyptic society. So you're dealing with robots and you're trying to solve puzzles, but you're this kitty jumping up to levers. And so again, like when I say there's a game for everyone, for cat lovers, for little girls whose dads are allergic, Stray might be for you. They're actually, last year, I think it was 2023, the Grammys gave out their first award for video game score. And so if you think about the original video games and just where we were with technology, we were 2-bit, we were 8-bit, things were very simple, it was very pixelated. You know, that's how we were designing art with computers. The same way that movies have changed and CGI has changed what we can experience on film or in TV shows, technology has changed how we can create video games. You know, when I talk to people about video games, I remind them that video games are one of the most beloved and popular forms of entertainment in the world, but it is a form of entertainment. And so there are stories, there are characters, and video games are now inspiring other forms of entertainment. And so you see, you know, one of the most popular video games the past few years was a game called The Last of Us. It was one of HBO's most popular shows. Fallout is Bethesda's game, Bethesda Software's game, and now it's the most popular show on Amazon Prime. The second top rated movie last year, 2023, was Super Mario Brothers, and we all know where the Mario Brothers started. And so it's not just that other forms of entertainment are feeding video game stories. The artists, truly the artists, the developers, the creators, whether it's graphic design, costume creation, music, as you called out, they are inspiring other forms of entertainment that we are consuming, whether it's through TV, movies, comic books, music. A lot is coming from video game technology and video game creation and story design. You know, oftentimes when I'm talking about gamers, I like to remind us, no one type of person, like women, men, we're not a monolith, right? We all like different things. We have different hobbies. We're interested in different things. What we see with games now, what's been really exciting with the advent of the internet and mobile technology is that mobile devices, mobile phones have put a gaming device in literally everyone's pocket. And that has really accelerated who plays video games and widened the tent, if you will, about who comes in. I think so many of us think of gamers as console gamers. So I'm on my Xbox, I'm on my PlayStation, now Nintendo's console's a Switch. Or I'm a PC gamer, I'm sitting in front of something, I've got my headset, right? Like that is what the stereotypes conjure up when we think of what a gamer is. But VR is taking off. 12% of gamers are playing VR now, but mobile is by far the most popular. You know, we think about mobile phones, but also tablets, your kids' iPads. 78% of players are playing on a mobile device. Not exclusively, there's a lot of crossover, a lot of console players also play mobile, a lot of PC players also play mobile. Certainly that works with VR players as well. But mobile is by far and away the most popular device on which gamers are playing video games. So when you're on a plane, when you're commuting, you know, here in DC, it's the Metro. I love that cat. You've got to get straight. But, you know, every time I'm in a doctor's waiting room, someone is playing Candy Crush, someone is playing Farmville, someone's playing something on their mobile device. It stimulates our brain. It allows, you know, to take us out of the place where we are. It helps us relax. It gives us something to do. It's like a fidget. And so to your point, you know, we started with the Atari. I was telling you in the green room, it was Nintendo Entertainment System at home for me, the first NES. But now everyone's got a mobile device. Everyone can play games whenever they want.
Next up, we discussed how balancing a career and family caregiving can present many challenges. Let's take a look.
No, because I've been in this field for a very long time and know that there are about 48 million family caregivers, and they're caring for family members, neighbors, friends. It's not always even a relative. And I've known all along that over 60% of them work on top of what they're doing. So juggling is always a problem. The COVID epidemic, in a sense, had a silver lining that some people could work hybrid. Not everybody could work, you know, and be with, you know, the person they're taking care of. but it's really hard to do 20 hours of caregiving on top of your job, which is the average, 20 hours. Because many family caregivers start to feel that they have to cut down on their hours working because they have so many hours providing care. And that affects, of course, their income, not just for themselves, but for their families. And it has like a generational flow to it, that it affects your social security, affects a lot of things down the road. So, and they also worry that somebody is going to look not so kindly on them, their employer, that they will think, well, they're not really paying attention, or why are they leaving early to go take, as it turns out, their mother or father or brother or somebody to the doctor's office or something. So they keep it inside. And that's stress when you're
Yeah,
keeping things inside. Again, I think COVID really shined a light on the fact that lots of people were family caregivers and they needed that kind of flexibility. So flexibility is the number one thing. If you can offer somebody the ability to work at the different hours and the different places they can work. Of course, not every area can do that. I'm a nurse by background, so you can't just work hybrid all the time as a nurse. But at flexibility and understanding that you have a lot of people who are working for you as an employer who are doing these things. And by the way, they themselves might be doing it. So, they're not immune to being a family caregiver themselves. So being very open to that, sharing the fact that they either are a caregiver themselves or they know others that are, and we understand that this is an economic problem for employers. If they can't retain their workforce, that's a serious problem, trying to replace them. Retention is everything. These family caregivers, they're talented people. They want them to work. They want to do a good job. So the employer needs to do everything they can. Paid family leave, even if it isn't a state or federal benefit, give them that time off that they need to have. That's the other really big important part. And one of the things the study that we did with S&P Global showed was that even when the employer is offering benefits, very often the family caregivers aren't aware of the benefits. So it's not just creating them, it's letting people know that they exist and letting them know it's okay to use them. Please use them. Again, people worry that if they use the benefits, they will be passed over for a promotion or some negative thing will happen to them, all that anxiety. So an employer that says we have benefits, here's where they are, and please use them as you need them because we want to retain you.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to? Drop us a line, and don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Then visit our website. We're back again tomorrow for another edition of BRN Sunday. We'll be joined by the Legal Eagles, David Levine and Kevin Walsh of Room Law Group, and also Oliver Rennick of the Schwab Network. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.